Why the US dollar could fail with more financial sanctions. Next on the Energy News Beats Daily Stand-Up.
The UK North Sea oil and gas jobs at risk. Costs skyrocketing and the anti-fossil fuel push. Michael, for this could be thousands and thousands of jobs. And if you take a look at it over the next several years, it's going to average of 400 jobs a week lost. By 2030, UK offshore energy workforce requirement for oil and gas renewal between 125 and 163,000 jobs compared to today's approximate 154. This is huge because the push in the UK is to get rid of all fossil fuels. I have some bad news for the UK, Michael. They're going to need fossil fuels. They have a energy mix problem. They still rely a lot on natural gas. So they're not going to make it. And I found this very interesting when I tried to make an analyzation of this and say, wait a minute, if you're going to go 100% renewable, how much tax revenue are you going to lose as well, too? There is just absolutely no way the UK is going to make it.
No, and I think you accurately put it. They have an energy mix problem. And that's the big problem with not just the UK, but all of these countries, Hawaii, California included, who have this energy mix problem where the cost to provide energy to them is artificially inflated because they are trying to artificially determine what goes into their energy mix. Now, in Hawaii, it's a little bit different because they don't have any, they have to import all of their energy and they're subjugated to the Jones Act, which means we have to use American ships. There's not enough ships to come in. So there is an interesting part when it comes to that. But from the UK, I mean, it's pretty unbelievable. I mean, you accurately point out in this article, that the UK has received about 350 billion pounds of production taxes since the 1970s. There's about 200,000 jobs, including direct, indirect, and what are known as induced rules. And the crazy part is they are able to meet 82% of their domestic oil and 38% of their domestic gas demand through drilling just in the North Sea. And yet they want to shut it all down and move to offshore wind. Unbelievable.
It does not make any sense. And the more I wrote this story, the more my head hurt. Honestly, this was absolutely horrific when you start considering stupidity. Let's roll to the next one here. I'm seeing this trend around the world, and I want to give Brazil a shout out for this. And there's a couple key nuggets I want to go in this. Brazil's GNA launches a second LNG power plant. Michael, the LNG to power, this came in from our news feed in September 2021. GNA commissioned their first 1.3 gigawatt LNG power plant. The second one that has come online is coming in and it is getting ready to roll. LNG to power plants in coastal areas makes a lot of sense. Now, where did that started me thinking? How is Brazil's energy power? And let's take a look. Hydropower is 57% of Brazil's backbone grid. That's pretty cool. 13.9% is wind, solar is 9%, biofuels is 6.8%, natural gas is 7.1%, and nuclear is 2.1%. Coal's only 1.9%, oil is 1.5%, and that's in the back areas where that's all they can get. That's one of the best looking mixes I've seen on the planet, man. That's clean energy. If you're talking clean energy, there it is right there.
No, absolutely. I mean, it's a really good mix. It's one of the reasons why they have very low cost of energy. They do have a decent amount of renewables. As you mentioned in this article, they have their electric mix is among the cleanest globally with 83 to 93% of renewable generation, which contrasts with about 25% of the entire of the rest of the world. They do have, they do a lot of hydropower, as you mentioned. Okay, a lot of hydropower. The interesting part about that is, though, it's really hard. They've kind of maxed themselves out on hydropower because there's only so many rivers. There's only so many places you can put a dam. And we know you love hydro. I love hydro, but you're limited by exactly where you can't put it. So I think it's interesting. You also point out that they're a global leader in biofuels, which, I think it's cool. I also think there's a lot of the biofuel industry is a little bit of a scam from that standpoint. But I absolutely love this, and it's going to be why Brazil continues to be a leader in low cost energy.
And keep an eye on the coastal areas like Petro Vietnam and all these others that are bringing on LNG to direct power plant. That is something that's trending. Place to look for investments. Let's go to the next story here, Michael. Russian LNG exports dip among sanctions and EU clampdown. The dark fleet role in the energy trade. Michael, the amount of information that is out there right now is mixed, and they're saying, "Oh, wait a minute, LNG trade is down because of the EU sanctions." It's because they had a little bit of a maintenance issue. Was not because of sanctions. Sanctions don't work on the way that they've got it set up. The dark fleet, oil tankers, the dark fleet has about 600 to 101,000 globally, around 400 crude tankers. And then you take a look at the LNG dark fleet, it's smaller. There's 64 unique vessels shipping LNG in 2024. Michael, they can skirt around, but the key problem with the Russian LNG exports is it's being traded in rubles, and that is outside the US dollar as a currency. And that's what nobody's talking about, is think about how much OPEC plus oil is no longer being traded in US dollars. That number is significant, and that's hurting the US dollar.
No, it really is. And you've been on this dark fleet for 3 years now. And 2 years ago, or even before the Russia invasion, and I was calling you a conspiracy theorist. I mean, I still think you're a conspiracy theorist, but you had this right, unfortunately, from the standpoint of that. And it goes back into your theory of sanctions don't work. And so the fact that this is happening, the fact that you're seeing Russia still be able to use these tankers and get their oil out, and the fact that now they're going around the US dollar is also showing the rest of the world that maybe the dollar doesn't need to be the reserve currency of the world. And that's a scary thought. Very scary if you're an investor, for the US dollar to not be the world's reserve currency. That has to scare you, because the implications are far reaching. I mean, first of all, the debt markets will go absolutely insane.
You know what? You just nailed the biggest story of this not being talked about, and why President Trump is so scared is because if the U.S. dollar was not, I just got off the phone with Christopher Messina, who wrote the Messina's federal budget. He and I were talking about some of this stuff, and you sit back and go, if the United States wasn't the world's currency right now, the U.S. dollar, we would be bankrupt. That's how important this is.
Absolutely. It's crazy. Let's jump to Texas here and talk about their legislative session.
I enjoyed putting this one together, Michael. The 25 regular Texas legislation session concludes. Key energy and oil and natural gas bills analyzed. Let's go through some of these. And I wanted to say, wait a minute, as a Texacan, how much money has actually come around on this? And I put a chart in there from 2019 to 2024, and we're talking probably about $27 billion a year is what the tax revenue for 2024 comes in on. That's a lot of money that the oil and gas money pays there. So let's step back and take a look. Texas Energy Fund expansion, $5 billion allocation. What it does, the state budget allocated $5 billion to the energy fund to finance new natural gas power plants. And Michael, my analyzation of the U.S. grid shows that Texas, Pennsylvania, and 2 other states are okay. I'm now checking off states as they are able to be like okay for more plants. There's only like 6 states that actually have a plan.
Yeah, there's a bunch in here. I think the big part is the expansion of the Texas Energy Fund, and basically what this meant was they're allocating about $5 billion more to the Texas Energy Fund. Basically the fund is designed to help reinforce dispatchable power. A lot of it goes to ERCOT. A lot of this a lot of the money was earmarked actually post-Winter Storm Uri, which if you were down anywhere in Texas during that time, it got a little cold down here in basically took down the grid. I remember I was still living in Colorado, and we were laughing because it's like, well, you can't build a grid to sustain 5-degree weather. Get with the program, folks. So this is very interesting. I think you accurately put here from an analysis standpoint that this specific point underscores what Texas kind of calls its above all of the above energy strategy, but it does lean heavily on natural gas, which is critical. A bunch of those anti-renewable bills, as you mentioned, are stopped. I also think, as we talked about on a show last week, there's the plugging and abandonment orphan well bill that was sort of slipped into this as well, that I think is good overall. It's going to cause a lot of shifting in the business when it comes to oil and gas here in Texas. But I think for, if you're an investor specifically looking to allocate into Texas, what this means is there's more capital going to be flowing in here. So the real question is, how do you go about the allocation process? Again, with grid reliability becoming something interesting, with the push for data centers, and with the attempt to deregulate and get the government and legislative process out of the way. I mean, really, that's what a lot of these show is, that they're trying to take the regulatory burden, at least from Texas's standpoint, out of here to make it a lot easier to have capital, specifically from an energy side, flow in. Because if you're trying to build a data center here in Texas, well, the land's not your problem. It's the energy.
It's your problem anywhere in the United States. And there's only a few states that you can build a data center in now. Hey, one thing I do want to give a shout out to Carr Ingram. He and Steve Reese and I are working on he is with the Texas Energy Alliance, and we're going to do a summary podcast of this as we get rolling. And Governor Abbott looks to start signing some of these bills. We're going to start looking at that process and follow up on it.
Yeah, absolutely. So, all right, guys, let's jump over and cover some oil and gas finance stuff. But before we do that, let's quickly pay the bills. As always, guys, news and analysis you just heard brought to you by EnergyNewsBeat.com. Check out the description below. All links to the timestamps, links to the articles. Check us out on Substack, theenergynewsbeat.substack.com. We're putting a bunch of custom content that you can only find on Substack. It's really where our analysis is going, or as Stu would say, analyzation, but for the rest of us, we call it analysis. And it's mostly going and primarily going on Substack. I will be rolling out a new white paper, most likely as you listen to this. It'll probably be tomorrow, or it'll probably be Friday. It'll be one of those, or it'll be Thursday or Friday, one of those 2 days. We will be rolling that out, and that's for our paid subscribers only. Great way to support the show. Sign up for a paid subscription there. Shout out to friends of the show, Reese Energy Consulting. As you can see by Stu's hat, we love them, guys. ReeseEnergyConsulting.com. The midstream expert, guys. If you have anything that you're worried about or thinking about in the midstream business, they do a great job of breaking it all down. They've worked with every company from a guy in his garage all the way up to the largest publicly traded company. So if you're wondering whether or not you fit into their business model, trust me, you do. If you're not working with an oil and gas marketing company as an upstream company, I highly recommend calling them. They will save you lots of money. Tell them Energy News Beat sent you, and they will give you a 1,000,000% discount on whatever contract they send you. That's a joke, but definitely tell them that they sent you. And then finally, guys, invest in oil.energynewsbeat.com. If you're, thinking about allocating capital in the energy and oil and gas space and are wondering how to do it, wondering what is the best type of investment right now as oil prices sit where they are, where's the future going, where natural gas sits, guys, we have a great ebook that breaks it all down. Go to Energy Newsbeat. You can go to the finance tab we have on our website, or you can just go to investinoil.energynewsbeat.com. There's a link below in the description. We'll get you that ebook, and we'll get you connected with all the resources to help you continue to accurately and profitably allocate capital in the oil and gas space. Well, that's it, Stu. Let's look quickly at top line indices. S&P 500 up about 0.6 of a percentage point. NASDAQ up about 0.8 of a percentage point. 2 and 10 year yields up about 5.6 percentage points and 0.4 of a percentage point, respectively. Bitcoin up about 0.5 percentage point, just over $106,000 at $106,041. Crude oil up about 2 percentage points today, currently sitting at 63.44 as we record this late afternoon here on the 4th. Brent oil basically flat, 65.53. So this is, again, a very interesting collapse between where Brent was and crude is. They're dialing in on each other. About a percent jump for natural gas, up to $3.72. XOP, which is our EMP securities contract, it's up 2 percentage points, 123.84. A lot of what's happened is geopolitical. I mean, that's really the only change that's happened day over day, couple days over the last couple days. One, we've got, that Russia, Ukraine, there's some crazy stuff going on there. I know Stu talked about it on yesterday's show, and I don't need to opine so much other than to know that there's a large risk that war now escalates, and that will only drive prices up. We did get leaked that Iran is set to reject the U.S. nuclear proposal. We have seen some Canadian wildfires knock out some oil and gas oil supplies there in Canada, increasing the supply. There actually has been some reported lower inflation in Europe, which could lead to a possible rate cut in the EU, which actually might be interesting from a demand side standpoint. But other than that, I think people are just, it's what's going on in Russia right now. I mean, they're calling it the Russian Pearl Harbor. So it's going to be very interesting to see how they decide to react. All right, guys. Well, with that, we're going to go ahead and let you get out of here. Get back to work. Start your day. We appreciate you checking us out here on the Energy News Beat Daily Stand Up. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow, folks.